Morning, everyone. You joined us, Conrad? I remember WhatsApp the other day. What was the lady? I forget. It was a lady's name, also with a Bernardi. I presume it's your wife, actually. I don't know if she's going to be doing this. Just a quick rules, probably a big word. Just a sort of explanation, probably a better word. Conrad and anyone newer, Michael. I think most of the other familiar name. It's like a forum in here. We try and make it a bit of a fun, sort of democratic family do. I don't know, traders getting together, moral support, that sort of thing. It's basically not training like the classes. It's more of, say, a trading room forum where we discuss ideas. Morning, Conrad, again. We discuss ideas, strategies, various bits of information that could be of value, and try and get the practical aspects and understanding the realism of trading, rather than just the the stuff that's put out there on social media, which is all great fun, but sometimes it's not always practical. So we go through that. And it's very important to interact. If you're not sure, I have a bad habit of going too quickly, I talk too much or whatever, no problem. Just say, hang on, run that by me again. Or just in other words, if you're not sure of somebody, interact or anything like that. If you don't interact, I don't know, you don't know. And then you're obviously not going to get value. So it's just remember, it's not just when you sit there and it's going to be automatically programmed into your head. You've got to be actively involved with it. And the more you get involved, the more attention you get, more time you get on it. And other guys that feel left out, well, then put your hand out and get left in, if you see what I mean. So it's important to do that. If you're nervous about speaking, speak with pleasure. A lot of guys do, but then you just post on the chat line. But it is very important you take part. It's not just going to come by sitting it out for an hour and a half. It's not all going to suddenly fall into place. There's a few things that got to be learned. It's a skill, it's a business, and a few things you need to be able to operate properly. Just have that quick little spiel there before we start at 9:30. And post any trade ideas or questions on the chat line, and we'll certainly look at them. Remember, it's primarily a trading room. It's not a trading room, that's for the classes. Not saying, okay, I think I'll come get some free trade in the trading room. That's not going to happen. You need to have the basics, how to operate the platform, and then you hone and increase your practical skills going from that basis. I think a lot of people don't get that. It's like saying, I want to study maths at university, but if you haven't got a background at school on maths, you're going to be left out because they'll start assuming you got that background. And that's no hack for a fact. I'm to university, the fallout rate the first year. They're not properly equipped to do it, basically. Morning. Okay, it's 9:30. Okay, just start the fact that Kenneth in. Just have to start with the fact. I just have to stop occasionally letting guys in. Right, where were we? Yeah, it's going to be quiet. Okay, just as long as it doesn't deny me recording. I'm not a tech expert here. It's going to be quiet going up to 2:30 tomorrow afternoon. Right. Right. Okay. It's going to be quiet going up to 2:30. Yesterday was like snail racing, those who know that, in the markets. Probably the same today, going into 2:30 data release of the US Consumer Price Index being released tomorrow. Normally, the non-farm payrolls coming out once a month on the first Friday every month is the number one fundamental. I think that's jumped to second place. The CPI is taken on far bigger and more important. As we all know, for those who attend the trading room, world debt is getting out of hand, and they're trying to start bringing that into control by increasing interest rates but by doing so, you're putting pressure on the banks. Now, so, as you solve one problem, you create another one. So it is critical is what's going to happen tomorrow at 2:30, whether any progress made in bringing the inflation rate down. So if the CPI comes out below the expectation, you're going to see a weaker dollar, stronger share prices, stronger gold, and stronger indices. If, however, the difference between the actual and the expected is higher, now as a higher figure comes out, that'll be perceived as inflationary, more pressure on interest rates to be increased, which will be strong dollar, bad gold, bad shares, bad indices, and it'll be, like I said, strong dollar. Bear that in mind. Now, the difference between the expected and actual will exacerbate that movement expected. Okay. So in other words, you're expecting 10 and it comes in at 15. That's a radical difference. And it'll have a major impact on the price of the market virtually immediately. And if it's like 5 instead of 10, for example. So just bear that in mind. So I'm expecting this morning and this afternoon and tomorrow morning's trading room to be a little bit on the quiet side, nervous side. Already came out yesterday, and I've got a couple of things I've sort of saved on my laptop, maybe discuss it later on, where basically investing.com has backed up what I've just said. Well, I've backed them up, actually. Nothing wrong with immodesty there. But the point is, they're saying just that. That's why it's been such a sort of sideways movement on the markets. So we can discuss things here. We can learn stuff. We can have interaction and all sorts of stuff like that. But just be wary of trades. It's going to be quiet. We have a strategy meeting every morning here, 8:30, where we look to send out trades. And they asked me, because I'm licensed to advise, so I have to basically tick them off, if you like. And my opinion was, the suggested trades that came out all very fine, but I am a little bit loath to get very cute going into tomorrow's data release, especially on gold and especially to a lesser extent, to a certain extent on oil, and very much on the dollar. You might see some lovely technical build up to buy or sell the dollar, on the screen there, but that would be forgotten about if the CPI comes out the opposite way. So you might say, that's in a beautiful buy zone, let's buy it, come back, retrace, let's buy it. That thing could fly off if the CPI goes against that specific trend. Just bear that in mind. So we can use for discussions and learning basis, etc. Any new guys might find that time quite valuable. Interact. Okay. Hope we're all clear on that. We had a couple out yesterday. One was, I think the euro must give it a bit of a tough time with this. We got one out, wasn't sent out, but it was a trade in the trading room. Hopefully, it was a buy, and it looks like 4670. It didn't quite hit the stop, but it's not looking pretty. It came close to it, and then it bounced up a little bit. Whether it'll return up or not, I do not know. It wasn't so pretty. The ones that were sent out, the NAS did okay, but it's bouncing around, as mentioned before. Bounced around before. We got a short out. It's doing nice. It came down to 32. The hell, it's bounced back up again. Now it's back to more or less where the trade idea came out, 3 or 4 pips either side of it, which is nothing on the Nasdaq. When you get that kind of movement on the NAS, then it just have to look at the NAS. That's almost the barometer of what the market's like to be happening. Sideways, snail racing kind of scenario. That's really what is happening at the moment. Everybody's waiting for that data. Okay, we had another one sent out, which the CAD CHF. Been giving us some jip, but it might come right. I'm in it. And myself, somebody else, don't know if he's on the moment. What do we do with it? And we've got this one on a sell. And at the moment, it's just going nowhere, as you can see. Started to come off earlier on and came pretty close to breaking even. Then in the last hour, it's just popped up. Does that mean anything? In my opinion, it's all an opinion. My opinion, nothing at all. I think it's just high-speed traders, scalping traders, short-term traders. When I say and proprietary traders, these guys who work for the company have got virtually no costs, just taking 5-10 pips here and there, bouncing it around a bit in a narrow range. Nobody's taking anything bigger than maybe a 20 pip range on the damn thing, if you see what I'm saying. It's going to drift around. That, unfortunately, I'm just mentioning it is the name of the game at the moment. We did them down micro, and that one actually is actually not too bad at the moment. It's actually in a bit of a profit, but just let it run. It can pop up. Anything can happen. It's just bouncing around like the snail racing, tiny little trade range trading at the moment. So we've got a few out. We've had quite a few out. So we're just going to have to this time be patient and sit on it. No, that's what I'm saying, Pietro. Yes, you can. Sorry, beg your pardon. Sorry, I'm jumping the gun there. Yeah, I think you can. Yeah. On the micro, don't forget on the micro, not the other one. The micro, you can. Certainly, you can go into use the same figures. It's more or less the same price went out yesterday. With the same, and it's not going to hurt you if you get stopped out because you worked out your volumes correctly. But you can if you like. Yeah, just basically. You know, it's $50 a micro. You might want to risk maybe $100 to get a couple of micros. You won't make much, but at least be in it. And you're on board if it comes right. And if it doesn't, and the CPI is much lower than expected, the NAS will jump up. It will. And then you might get stopped out. Well, so you lost $100. So you can if you like, as long as you're understanding what I'm on about. That's the main thing. Okay, that's going to bridge me into the next part. For newer guys in there, it's totally understandable. When I started saying myself, you expect the broker to know. Sorry to have to say I'm going to have to disillusion you, dissuade you of that. There is millions. I know the guys, this time before, but you guys coming all the time. There's millions and millions of people out there trading with different money, different cultures, different strategies, different emotions. There's a lot of variables out there. We take an overall view and we try and get the probability on our side. Once we've taken a trade, whether it be in the NASDAQ or in Goldman Sachs or it's in a euro dollar or in gold, what after that happens, it's completely left in the hands of market movement. I can't control it, nobody can. How long you're going to be in there, nobody knows. Will it be an hour, a day, a week, longer, shorter? It depends on market volatility. If we take a view, it's going to go down, it goes up. I'm sorry about that. That's what happens. We have to take an overall view and we try and get the area of problem on our side. Do I know whether that's going to go up or not? I don't know. Do I know what the CPI is going to come out with? I don't know. And it's very understand. So with experience, you can get the odds on your side, but nobody knows 100%. What I try to do in the trade and get not many people understand that, but iron out the mistakes that you can control. I don't know what the gold price is going to be in 10 minutes time, never mind by tomorrow or the next day. But I do know about position sizing. I do know the CPI is coming out because I look at my economic calendar. I do know my dollar strength because I have my DXY dollar index there. I do know that I'm in leverage positions. I do know not what a leverage means, what gearing means, leverage means, what a margin is, make sure I've got free margin. Those things I can control. And that's what I try to go on about. These things you need to know because you don't want to get tripped up on things you can control. It's tough enough trying to make sure what the gold price is going to be basically going forward. So the more you can concentrate what's happening with market movements and less worried about is your position size correct, what this thing margin means, or I didn't know you had an economic calendar. What's that black line on there mean? What's you keep on about a moving average, whatever. Understand how to operate the platform, know how to close, how to partially close, how to modify. Those things you can control, and that's the homework you need. The other aspect I want to go into, whenever we buy a product, we obviously buy for what we call emotionally driven purposes. You never see an advert of a car on the road where a couple of people are arguing and they're not pretty people and that the car's got a dent in it or it's dirty or wherever and it's pouring with rain. It's always beautiful people, sun shining and everything's working, it's gleaming. That's the way it is, that's where our emotion works. In reality, of course, we do have rain, we do have arguments, we do have dirty motor cars, you get the point. So this is more not spoiling the dream, but to try and get practical aspects, how we can try and achieve it in a realistic method. And one of the major problems we do deal with is unrealistic expectations. It's a human psychology where everyone wants, but they don't want to give. Something for nothing. I want to go and look like George Clooney. I go to the barber and say, give me a haircut that makes me look like George Clooney. Well, that's a bit of an unrealistic expectation. I don't want to become as ugly as him. But you know what I mean. You know, make me look like Princess Di or whatever. We must be realistic. And you've got to understand there's three things involved in trading. First of all, well, not first of all three of you, you have to have all three. Take one out of the equation, excuse my language, you're bugging. If you don't have the right equipment and don't have the internet, you can't trade. If you don't have knowledge, you can't trade. If you don't have money, you can't trade. So it's no good having two of them without the third one. You've got to have all three. So knowledge is you either get it yourself, it's quite a difficult process, or you buy a course. I am not with Stock Market College. I'm with Quick Trade. Stock Market College sells information, educational packages. If you like theirs, there's plenty of guys who are quite happy to sell that product to you, which is it's CETA approved. So I haven't done it myself. I don't need to do it, but I mean, it is CETA approved, and feedback seems it's pretty comprehensive. Although remember, most of it's theory. We provide the practical ongoing here after you've got the theory. Then you need a laptop, preferably a monitor, but under a laptop at least, and you need reliable internet. You have to have that. And then you have to have capital. And that seems to be the problem most people have. They think they can win a race against a fast motor car with a bicycle. I am sorry, guys, that ain't going to happen. I know you're a nurse, but you want to earn the same as a qualified neurosurgeon. No, you're not going to. What is the difference? A neurosurgeon spent years and years getting that. Right, nurse has a very valuable point. I'm not a nurse, great nurse, that's not the point. You know what I'm saying? To try and getting the knowledge and then getting the right internet and the right equipment and having sod all capital to make use of it is not going to help either. Remember, as one Dealey brought up yesterday, and with us in a moment, look at percentages, not amounts. If you got £1,000 and in 1 week you made 100 Rand, that's 10%. You are going to be one happy chappy. You've got R1 million and you make 10,000 Rand in 1 week. In theory, you're going to be disappointed because that's only 1%. So the guy who made 100 Rand did better than the guy who made 10 grand because one did 10%, the other guy did 1%. The point I'm trying to make is if you put nothing in, you get nothing out. And this concept seems to be quite beyond. So I'm going to really labor it. I want to do this full time. It's great fun, etc. Right. What do you want to do to replace your job? I need 25 grand a month. How much you want to invest? They come up with figures like 30, 40, 50 grand. Well, that's just use some common sense. That's just ridiculous. No investment will give you guaranteed 50% a month. It's impossible. Nobody. You might get it 1 month, you might get 100% 1 month, but you might lose the next. You know what I mean? You've got to go in and work at a percentage. And if you put a tiny amount of capital in, where the problem is, you're going to get very tiny returns. And the amount of work you put into doing this job, which basically it's a business, for those kind of returns, is it worth it? You know what I'm saying? Do you want to go and run a business where you're there 8 hours a day, 6 days a week, well, make it 5 days a week, and you're getting paid, let's say, 50 Rand a month? Is it worth it? But that's the sort of kind of in return you get in if you put diddly squat as your capital. And this concept seems to be beyond. They're good at hanging on to think, I'll put a couple of bucks in and I'm going to get some sort of return. Well, if that's the case, why have people become neurosurgeons? Why is that employment? They're not employing thought, common sense. And that is what I'm trying to get across. You need to get the job taken seriously to do it properly, and then we can help. Otherwise, you can end up being disappointed. I am, all due respect to myself, not going to look like a Mr. Universe, handsome film star after going to the barbers for a haircut. It takes a little bit more than that. It takes a bit more plastic surgery, to be honest. And this concept, I'm really spreading out because I'm trying to point out to guys, they're not getting it. And the other aspect, you've got to be able to diversify. Everyone knows you don't have all your eggs in one basket. Then they proceed to do just that because they have no choice, because they're only going to one trade at a time because they haven't got enough free margin, going to a second one. Or they don't go to class, they don't learn anything about it, and they get margin call, and they don't even know what that means. They don't even know leverage products. That means they're going to have issues. You know what I mean? You can't say, I want to be a doctor, but I can't be bothered to go and study for it. This is common sense. If you can't be bothered, you don't understand it, you've got to, I'll be honest with yourself, is this for me? Because this is not a question of pop the pill and away you go off to Bahamas in your private yacht. And it's staggering the naivety of some people. So I'm not being hard, I'm trying to spell it out so we can get on for the right foot and do the job properly. Okay. And how much you put in exactly. I think I'm going to go and do the comrades. When's it? I think it's the end of May. Well, I won't get past the first 10K. You know what I mean? I haven't done the practice. I haven't put the graft in. You know what I mean? When's it about? I think it's the end of the month, isn't it? What happens, slightly off that, that's we call the trade fat finger. That's always going to happen. It's a little less with experience, a little less now, but I still do it occasionally. The market's moving quickly, you jump in, you don't quickly check, and you press the wrong button. That's going to happen. It's one of those things. It's always easy to say, well, check before you do it. That's nice when you're relaxed, but the market's moving, you're excited, you don't miss out, bang, oh, shit. Or let's look at the, let's give an example. I've done this many times as well. Let's look at the NZD-CHF. Yeah, I think it's good, sell it, we'll sell it, and blah, 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 blah. Then finally, at some point, I'm sorry, Roger, but you're on the NZD CAD, you're not on the NZD-CHF. Oh, shit, excuse me, but you know what I mean? So when things are moving fast, we do it. Yeah, so yeah, not much you can do about that. Well, you can, but just hopefully it gets less. It's one of those things. Okay. All right. So I hope we're all clear on that, you guys and everything. We can do this, but I am not a miracle worker. And I'm sorry if the trade goes wrong. I certainly didn't wish it, but it happens. That's why you have your position size calculator, get it from the live chat if you don't have it, and then you work out what you're prepared to risk. Before you click the buy or sell button, you've got to be comfortable with what you're prepared to risk if the trade goes against you. We don't want to say, that hit me too bad, that one, I know what I'm going to do. Then you're overexposed. You've got to say, what percentage am I going to prepare to risk on that trade? If I can mentally handle that, that's fine, then you go for it. Remember, if you've got more money, your percentage of capital is much smaller. If you've got 100 grand or something, you can risk maybe 2%, even 1.5% sometimes. If you've got 1,000 or 1,500, you've got to risk 10%. You've got to overexpose, you'll never be able to trade. Very few trades will come out with something as little as even 50 rand risk. Very, very few. It's a guy on 500 rand. Number one, he can't trade 90% of the time in the signals. He didn't have enough money. And number two, they can't diversify. So why they're putting that in? Sometimes it's shorter money on the bill. That's fair enough. But most of the time is they've been promised something, some miracle on YouTube or wherever by somebody selling them something, or they're thinking they're going to get something for nothing. If you're going to put in the price of a couple of hamburgers, a meal out, you're not going to get much in the international multi-trillion, not billion, trillion-dollar markets worldwide. You're trying to fight you're trying to fight a gun with a slingshot. Just bear that in mind. So start off, get to learn it, but that's fine, no problem. But I'm on my little bicycle here. I'm happy. It's better than walking, but I'm not expected to compete with a Ferrari. When people do that, I don't know quite what to say. The naivety is absolutely astoundingly stunning. I'll put it direct as it is. You will not be able to do that. It should be completely utterly obvious. And if it's not, it worries me. It should be. Okay. Okay. Click on the trade screen. I think you can do that. Trading screen. Probably just easiest to click on there and to say double click or whatever. Right. Okay. So that's sorted that one out. Hope we're all clear on that. I just want to do a couple of postings, and one or two don't have it. This one is the dollar index. If you don't have it, you've got to have it. It's very important. Just put it, make sure for everyone. Very important. It's made up of 6 currencies, the predominant one being the euro. Copy, save it, and minimize on your laptop. If you've got a phone, try and get a laptop. Again, you need the equipment. You need the knowledge. And always remember the 3 things. The rules, 3 things. I need the right equipment, the tools, I need the knowledge, and I need the balance, the capital. And if you haven't got the right tools, you can battle. I don't try and fix cars, fix electricity, and then come up with a plastic bloody spanner. Come up with the proper tools. Same principle. We go to this one. Is this the economic calendar? Yes, it is. This is also vital. Not important, vital. So if you haven't got it, now you have. Anyway. There we are. Copy, paste it, save it, and refer to me. You don't want to be going into a dollar when there's some important dollar 3-star fundamental about to come out. Okay, so keep that. The third one is what we call the 10-year bond or note in the United States. We're not interested in the bond, we're interested in the other side of it. The returns, the interest, the yields, the correct term, whatever you want to call it, the yields, the correct term. We need to keep an eye on the yields. If the yields go up, you'll find often has a negative impact on indices, shares, and gold. If they go down, as a positive. It's the other way around. We call it inversely proportional. It has a positive effect on the yields, the shares. Sorry, that's a positive effect on the shares and the gold and the indices if the yields come off. Correct, right? Yeah, that's right, quite around. The same with the dollar index. Dollar goes up, gold goes down. You get the general idea. Okay. Remember, when you do a currency pair, it's like a seesaw. If you think the Canadian is weak, then and it's an NZD CAD, then we buy. You won't be selling because you're buying the base currency. Those things got to remember. I know you did in the class. Know your lot size. Don't overexpose, don't underexpose. Make sure you got the calculator. Doesn't matter if you should know about gearing. It's professional for you to know something about the work you're doing. If you want to be in the business, know a bit about it, clearly. But this will basically do it for you. You put in the stop loss, the TP, and it will give you the risk for 0.01. Then you'll know what the volume is. If it says 100 Rand per 0.01, we call it a micro, and yours 500, clearly go for 5 micros. You get the idea. If you can't work that out, then you've got to seriously question yourself, will I be capable of being in the derivatives international financial markets? If you can't do basic arithmetic, then either go and find out how to do basic arithmetic, but it's like not being able to read or write. You need to know that, otherwise, I hate to say it, it's like not having a computer, not having internet, not being able to read or write, not having a cell phone, and not knowing 1 and 1 is 2. I'm sorry to say you're unemployable. That's just a fact of that. You've got to have those things. That's the basis. It's like, you get the idea. Yeah. So those basics you should be able to work out for yourself. That's basic arithmetic. Okay, right. So NZD CAD. Why do you want anyone on NZD CAD? Anyone want to do this one? I haven't even looked at it. Let's have a look at it first of all. Well, it's the neutral. No, it's not really. I use the 50. I come to that in a minute. I say 50 to 200 for the neutral zone. It's still in the buy zone. Okay, it's in the buy zone at the moment, but the Canadian is affected by oil. It's an oil exporter. It's an oil producer. So oil price will affect it, but because it does enormous amounts of its biggest partner, as far as I know, correct me if I'm wrong, is the United States, and what I do know is it's geographically it's next door neighbour, and it's very, very similar culturally. It's like the Scots might not like the English, and there's no Canadians are better. They might do, but let's never mind all that stuff. The facts are Scots, Welsh, Northern Irish, and English, same race, same culture, with certain different culture, same type of people. Well, the culture and similarity there, so they tend to sympathise with the dollar. So you often find if the dollar flies off, not exactly symmetrically, the Canadian comes off as well. So at this stage of the game, would you buy or sell it? But again, the CPI coming up next week, I'm just looking at it as a request there. It came down a bit, as you can see, from there to there. And then soon, that's only 12 pips that distance leads to, before it bounced back up again. So the buyers are coming in. It gets to here and it bounces down. That doesn't indicate a trade for me. If you want a short, I'll put up with pleasure, but I am not going to go for it. Anyone else does, that's their choice. Remember, it's your money, your decision. It's not my money, it's your money, your responsibility. I can advise, but you make your decision. And if you decide to do it or not, it's entirely responsibility. Put it up there, and then we can maybe TP down here, and you get a risk reward. 83.51 for 83.52. Make the spread. 83. Make it 54. Right, you get a risk reward above 1.5, so that's okay. $100 a micro. If you want to do it, yeah. I'm personally, my opinion, what I'm going to do is not in my opinion. What I'm going to do is exactly this. I'm going to stand aside. I'm very much Pietro is me, or I'm with him on this one. If you want to short it, those are the figures. I'm just making it clear. I will not be doing that. But anybody joins, we've had it before. We've had trade ideas come out in the trading room. It's got support. We've written it down. I haven't been for it. It's worked out well. Sometimes not. So go. We've even had said, I think something's a long, and guys, I think are short. Put down those short and the long. Put the two down, see what works out. I've got it wrong. Got it right, like everybody else. Where that NZD CAD is going to go shooting up there, shooting down now. Trust me, no person on the planet knows that. They'll take an overall view and they'll see what happens. I haven't got gold on the screen. She asked me what gold is. I haven't the slightest idea. Check it out. Get my point. I can guess, I can say, where I think it's going to be a range between 20 and 2025 as we speak. It's a fairly educated guess. But until I check it out, I don't know. That's what I'm trying to get across. I'm totally a little bit with you, Cody. I mean, the broker obviously wants the guys to trade, but I want the guys to trade properly, and I want to trade well. And then the happy clients are happy. You say happy wife, happy life. Well, client doesn't rhyme with life, but same sort of principle. I've got stuff in there, and but whether I add to it, it might occur. I can't say for sure, but I'm leaning towards getting very quiet. Okay, but anybody want to join Jacob on this? Anybody want to join Jacob on this? He wants to, I think it was a sell, yeah. Anyone want to sell this one with Jacob? If I get someone to support him, I'll put it down. As long as Jacob does, any two people, I'll put it down here and we'll refer back to it. But it won't be sent out to everybody because I haven't ticked it off. So I don't agree with it. But I might be wrong. Anybody? Is anybody out there? Yeah. Not now, basically, yeah. If we can get direction, we need confirmed direction on non-farms. Hopefully, pray on this, be produced by CPI. That's what we want. The lack of direction is a nightmare. We want barrel bolt, we want direction. Okay, I'm sorry, it looks like you're on your own. Well, the 1.8 has got a lot to do with this. Whether it's 1.6, 1.8, don't have a lot to do with what it's more to the point is, do you like the trade or not? You didn't leave it alone. 1.8, 1.4, 1.5 doesn't make much difference. Okay, so we'll knock that off then. Now, talk about gold, just check it. I think it's 20 to 25. Let's see, we'll look. 24 there, I was in that range. I expected that, but I didn't know until I checked it out. Your NAS, if you joined it a little bit later, I think got a better price. So if it peaked or something, I can't remember, was it Pietro joined a little bit later. Joined slightly higher up, you should be doing okay, but expect to pop around. Just let it and forget about it and let it see what's happening, etc., etc. Yeah. I personally think CPI, personally, Gerard, again, I go on a lot, and Farney will back me up on this, is where the powers that be like to not lie, but what they do instead is withhold certain information, which can give, you're going to be the black sheep today, okay, Jacob, no problem. But they like to sort of, shall we say, withhold certain information that might sort of go against their narrative. So the CPI is basically covers the lot. The core CPI leaves out food and fuel, energy and, well, food prices. Now, but food prices and energy can behave very much higher than the normal CPI. So leaving them out can sometimes juggle the figures a little bit, if you see what I mean. So I'm not saying there's anything wrong with looking at both of them, as long as you understand what the difference is, number one. And number two, I like to see what the CPI is, because it's all very well to say we've only got 4% inflation this year, but fuel, which is transport, which is absolutely vital. It's literally the oil that gears, that lubricates the economy, literally. and food prices. I don't care if you can't afford this, you can't afford that. You've got no choice. You've got to afford food or you starve. So that I think is quite an important part. So fuel's shooting up at 20%, food's shooting up at 20%. Then they say, oh, the CPI is only 5%. That'll give the president nice come out and say, look, we're doing all right. We brought inflation down. But hang on a minute, you're leaving out two rather important factors. And you put those facts together, it might not be 5% anymore. It might be 10% now, and that's a different factor. I hope you understand what I'm trying to say with this. So I personally think the CPI is, but it's not harm knowing both. Like everything else, as long as you've fully got the information to make an informed decision. Most times people make decisions on half the sodding information because the important part's left out. I was engaged with a lovely person, but she had a bad habit of doing that. And asked questions that, and then go down the wrong street and said, well, you left a rather important piece out of there, which could have changed the whole situation around. You know, can you not sort of like, but you never asked, Roger. Well, I didn't know to ask. It's up for you to be, I mean, give that information. You know, it's like a trader coming and says, what about a long on the NZD CAD? Okay, and the price is here now, right? And I said, I'll leave it now. Find out afterwards, the person's already bought it there. Well, hang on, that piece of information is very important because it got a completely different idea on it. Or, yeah, I'd like to buy it. And they said, but I put a buy stop in up there or something. Well, that's a completely different ballgame. When the person says, I like to buy it, I'm assuming they mean at market. And you've got to take away that assumption by giving that extra bit of information. So I'm feeding you back the correct way. And that is another common practice. They put on 3 or 4 words on the line on the question, leaving out a myriad of ambiguities. So often the information, I'm a bit more experienced, I try and drag it out now. We could save a lot of time. I didn't have to spend time dragging it out. Otherwise, I'll jump in, I've heard the question, I've answered it, but it's actually not the full question. And that is something going back to the CPI thing. The core CPI is leaving out, to me, 2 very, very important factors, as mentioned, food and fuel. And everybody knows about the fuel price and the food price. You might not know about the latest bloody CERN price, machinery price, but those you will know. Okay, hope we're clear on that. Good. Well, you might come right, Jake, if you're the back sheet today, you might come right, might go shoot that, but I'm not on board, so that's the way it is. Okay, we've reviewed some of the ones who are in, let them run, etc. If anybody, I don't think anybody is in, but anyone's in the US dollar one and in a nice profit before the CPI release, don't have to close it, just modify your stop loss to make sure you covered your costs. So that if something goes wrong, you're not going to lose, it goes right, it goes in your favor, you can make a nice big profit, okay? Whatever that is, but as long as you've got enough of free margin, etc. But if that's the case, that's fine. Don't really care. The main thing is have enough free margin to go in and work on the base. We're going to do gold tomorrow in CPI straddle trade scenario, and it's going to be a 20 rand a micro. If you stick with euro dollar, I'll be doing the gold tomorrow instead. But if you want to do the, and if it's a currency pair, not the rand. Repeat, do not do the rand, because the rand, unless you know what you're doing, you've got more money, the costs are higher and the margin's much higher. So I'm talking about normal across some major currencies, 80 bucks a micro. If you're going to do gold, it's 20 rand a micro. Your leverage, I'm not worried about, as long as you've got enough free margin. That's the thing I'm worried about. Okay. Some people think leverage is another way to get something for nothing again. I haven't got much money, so I'll increase my leverage so I'm going bigger. Well, now you're overexposed, you get margin call. If you don't have, you haven't got. There's no way around it. And that's the bottom line, trying to get across to people. Yeah. If you don't attend the classes, you're not going to learn. I don't. Boring. No choice, no matter. Okay. Stop this self-kidology, which seems to be an international problem with people. Including myself, who's all, but try and get on top of it. You must lie to me if you must. Try not to lie to yourself. All that cognitive dissonance. That's called self-denial. Okay. Right. Yeah. So we're doing the gold now. I want to go back to some investing by who said earlier on. about the EG, and you guys just discuss that for me. Because if you've got a trade idea, that's just stop me and that comes first. But in the absence of that, we'll go over a couple of things. Okay. Right, let's start off with the moving averages. Now, I think most of you got it, but just in case you don't, I'm going to start off with a 2, which I very, very seriously think you must have. And the reason being that internationally, and they're on their own, you can probably trade without all the other indicators. It's that important. And that's the dark blue color there. You can make any color you like, as long as you know which is which. That's the dark blue color there, and the brown. That brown one is the 200-day, not exponential, 200-day simple moving average. You must have that, and you must have the 50. It acts as a filter. If it's above the 2, we're looking at strong zone, between the 2, neutral, and below the 2, weak zone. As simple as that. However, I've got 2 more on there. And they only had this one on the 100 recently. One of the clients, fairly beginners, said, well, what about that one's quite popular? I looked at it and said, yeah, you might have a point. It's quite popular, so I put on. That's the 100-day moving average. It's quite useful. It's not imperative, but it's useful. So I put it on. That is the black line. All of them simple. That's 100. Now, I'm going to show you again the EJ strategy, which has evolved here in the training. You won't find any books or anything like that, mainly because we made it up about 3 weeks ago. So pure in the training. Don't go and ask the presenters or your mates and what you're talking about. All you hear. But you will need this particular magenta 10-day or 10-hour trends. Obviously, these are all 100, multiply that. So on the weekly one, that's the 200 week, the 10 week, 100 week, the 50 week. So on the hour one, that's 100 day or 1 hour. You get the idea. So you need this maroon one, magenta one, sorry. You need the magenta one on, you get me? If you want to do the EJ strategy, purely momentum strategy, nothing more complex than that, which I'll go into again in a minute. So if you like them, put them on. So go in, you know how to do that, go insert, go to indicators, go to trend, and go to moving average, and put them on. Make sure it's close.
Let's see, me, brother.
Use it.
What job?
Oh,
Yeah, umumikini.
yeah. Okay.
Oh.
Hold on a second. Hold on.
I'll put it so you can see it. Please mute if not engaging with, spell it right out, see, it's totally unambiguous, with the TR. What's the TR? Never mind. All right. Okay, you put in the period, the simple, you get the gold, click on it, put the color in, the dimension of your choice, and you like mine, stick it in, and then make sure you thicken the lines about that thickness and okay it. Once you got all 4 on there, go to a blank part of your chart, right click, go to templates and save it. Put your name in, whatever you like in there, but put your name in and then click on save. So if you've got them saved. Now, I do not use the 100 for the EJ strategies. You might want to have another one where you take it out and you also go and save it. So when you saved it, you'll have them all down there. All the ones you saved. I've got 1, 2, 3, 4, 5, 6, 7 down there. So you got them down there. You can have as many as you like. That's important. Anybody not on that one, if you don't have the 250, you don't have to. It's your choice. I'm strongly suspecting you make the wrong decision there. You should have. If anyone hasn't, wants to go over again, it's very important. I'll do it. You've got to have that. Aha. Stuff's coming. So I'm just going to put it up in my QT WhatsApp group. You know about it here in the trade room. It's just about the CPI. Okay, so now just post on the group. That's great. Now, those don't know. Okay, have you all got that's great. Now I'm just going to put my number down here. Roger, trading support. Please WhatsApp because it's timeless, so it's quickly on the WhatsApp, more convenient. WhatsApp 061 529 3431. Right, please, not on demos and not if you've got less than 500. Preferably not if you've got less than 1,000, really, to be honest, because I cannot add value. What position size? 0.01. Can I go to the second one? No, you can't. Oh, I can go to 501. I can give you 1,000 to 1. You're overexposed. I can't add value. But if you've got Tom in your account and you want to be serious about the trading, I can assist you. There's the number. If you got more than $2.5 grand or $150 in your account, and you're not a member of my VIP QT WhatsApp group, please WhatsApp me. And don't put, hi, this is Joe, can you make me a member? That's not good enough. Use some common sense. Hello, this is Joe Blogs, real account number 200-123. I've got 4 grand in my account. Please upload me to your QT VIP group or whatever. I'll do it. I don't have to go and say, who's Joe? You know what I mean? There's a lot of Joes running around. You know, please use a bit, you know, don't be all the information be forthcoming, and then it saves us all a lot of time. And then I'll upload you, and then you'll get daily economic updates. Things are posted on there, like the CPI, and the details are all there. Now, if you want to join me in the CPI tomorrow, you need to have at least $1 grand or preferably 2 grand or more. We can only take a limited amount of numbers. We don't want a seat taken up by someone who's got squat to leave out someone who's got some money, wants to take it seriously and do the job properly. So don't come in because it feels like it and try it on the demo account. Oh, look, I made 1,000 rand and it was on the demo. That's self-godology. Do it or do it, not do it. You know what I'm saying? If you do, it starts at 2 on the same TR Zoom as this one. So it's this same Zoom ID and starts at 2. Now, again, people wandering 20 past, they want me to explain how the mechanics of the trade work, and they have no idea about it. And it's to release the figures at 1/2 and they've got to start placing the straddle trade at 25 past, and then they want me to explain it all in 2-3 minutes. I haven't got the time. We're about to get the data release, you missed out. In fact, I'm being honest with you guys, it annoys me. You want to be successful, but you want to be a successful amateur. Let's start getting professional here. You know what I mean? Let's do the job properly, because that's why 90% of people lose, not because they're stupid or whatever, just trying to do the shortcut. So let's do it properly. So arrive at 2 o'clock. If you already know how to place it, you can arrive a little bit late, it's not a problem. But don't ask me at 25 past, how do I do it? Not enough time. Sorry, mate, it ain't going to work. Or am I too late? When it says 2 till 3 o'clock, and they come at 1:45, and the diary start was 2, you're too late. Yeah, you're too late. What can I do about it? Nada. Terrio, goodbye. You know what I mean? It's annoying. You know, it's ridiculous, in fact. You want to be professional. It's got to be harsh, but that's the way. I hope I'm not being too harsh, guys, but I'm trying to get this across. Because never mind wasting my time, the guys are wasting their time as well. They got no chance. They're going to lose. Because, you know, you know what I mean? It's obvious. So, if you're not sure, we'll do a couple here, but rather 2. We'll go 2-3 times. Make sure you're right, and then you can place the trade just before, and then hopefully, if we get differential figures in the expected actual, you got the concept, you can make a buck. And the guys have done it in FP and the CPI the last couple of times. The feedback, very happy chappies, and it's a nice way after all this boring snail racing we've had on today and tomorrow, yesterday and today and tomorrow morning. It could make up and do well out of it. So it's important, if you've got Tom, take it seriously to do it. Okay, hope we're all on the same page there. Right, now let's go to the EJS. This is, as I said, remember, please get this. It has nothing to do with anything outside the trade room. It came up about 3 weeks ago, pure momentum. What we do is we start off alphabetically and we look. We start off with the daily and we ignore the 100. We look at the blue and the brown lines. You should all have it now. I've mentioned it. You start off the AUD, CAD. Things like Cup guys have left note. It's just the internet, not me getting harsh. But I think, I don't know your feedback on this. Am I getting too harsh or whatever? But you know what I'm saying? I think we have to clear up some reality in this life. And it probably saves them a lot of sweat as well, you know? Trying to think they're going to get something for nothing and they're wondering why it doesn't work out, you know? I think hopefully if they get this, I'm doing them a favor. But if not, just let me know. They're not be harsh. I want to get it through to them. Sometimes do it politely and not getting it through. Right, we go to the daily AUD CAD and you look immediately. Is it above the 50 and the 200, or is it below the 50 and 200? As you can see at the moment, neither. It's neither. So you ignore it. Let's go to the next one. AUD CHF. Is it above the 50 or the 200 or below or in the center, Mr. Offender? No, it is below. It is below. We can look at it. We look at it to sell. Then we go to the hourly, and now we ignore all the others. We go to the 10. Is it below the 10? Yes, it is. So you can look to sell that. So on the principle of this specific strategy, no ethic, nothing else than that. You don't even need a risk calculator. All you do then is you know that for 0.01, the risk is, I think it's 90 Rand, that's right. 90 Rand per micro is your risk. So you can work out your volume from that. Your stop loss will be 50 pips away, no TP, and you can either put a trading stop or just modify your stop as you go along. If you're quite busy, it might be nice to have a trading stop. If you're not busy and you're busy, but you're trading, you're not got other stuff to do, you can just modify as it goes along. And then after, if it works out your nice profit, you can reduce your risk from 50 pips to 30, maybe 25, 20, until you're eventually stopped out. That's how the EJ strategy works. Any question? No, you still don't get it, Dirk. Is that what you're saying? We can do another one then. You go to the daily, ignore the 50. If you want to do another save one, take that out, confuse it, up to you. Oh, I said no, thought no, you didn't get it. Okay. All right. Anybody not get that and wants to do it? Because I'm quite happy, because it's going to be quiet in these couple of trading rooms as regards trading ideas, unless we can, hopefully you with me, find one. We might as well get this right. Half cut doesn't cut it. Do it properly. Let's do it again. Right. Let's stick to this one because we've got a possible trade on this one. Is it the 250? Is this market price below or above? Don't have to answer that. It's rhetorical. It's below. So we're looking for a sell. If it was up here, you would ignore it. If it's above, you would buy it. You with me? Here it's a sell. But before we enter, we've got to check, is it, if it's going to sell it, it's got to be below, not the 10-day, but the 10-hour moving average. So we go to the 1 hour. Is it above or below? So above, we ignore it. Is it below? Before we jump in, next thing you got to check is it right down here? It's about 20 plus pips away from it, the shipper's sale. How far is it away from it? A couple of pips. That's not even a thread. No problem at all. So, and next thing you do is you check, is there any major fundamental coming out on the Swiss franc or the Aussie dollar the next few hours? Well, I've checked for it, save you trouble. No, there ain't. If you want to do it purely on that momentum, all you do then is you go to AUD CHF and you say, right, how much I got in my account? I've got, let's say, 5 grand. What am I prepared to risk? Let's say 300 Rand. It's 90 Rand a micro, 3 nines are 27. So if I go 270, if I go 4 nines are 36, I'm going to be overexposed. 270, it's below my 300. So now I've worked that out. I don't even use a calculator. With a practice, you don't even know the calculator, but as long as you got the concept, and you want to use a calculator, as long as you got the concept, it's up to you. So yeah, so now I know it's going to be 0.03 because I'm willing to risk 300 or below, because I've got 5 grand. Clearly, if you've got 1 grand, it's a different ballgame. You've got to reduce your exposure. Hope to God that's common sense, because it worries me if it isn't. Then you put your volume in, and then you put your stop loss. Your stop loss, you put 50 pips above the sell, not the buy price. It's selling short. So you put 0.6077, and then you press the sell button. Are you with me? I'm not doing this one because, well, I won't be doing all that. I'll do it slightly bigger. I'm just trying to show you how it's done. So then you press the sell button. No TP, you press the sell button. Okay? If you don't want to do a stop loss of 50, ignore that and then press the sell button. Then you go to your situation down here, through the red ones, some red and bad are up and down. That's a CAD CHF. Across here, you see beside the CAD CHF, there's a little sort of, find it just sells, it's a red color. If it was a buy I was in, it would be a blue color, there's a little box thing there. Right click on it, go to trading stop, go to custom, and because you're putting 50 pips trading stop, you don't put in 50, you put in 500, because the word doesn't say pips, it says points. I hope you all know 10 points, 1 pip. So then you put in 500, and then you click the OK, and you got a trading stop of 50 pips, and you let it run. Now you turn around and you say, aha, I think I'm going to reduce I'm in a nice profit of 30 pips. I'm going to reduce my trading stop now to 30. You right click on there, you go to trading stop, you click none, you get out of it. So now you haven't got a trading stop. Then you go back to custom, and this time you put in 300. Okay, now you change your trading stop until you eventually stopped out or you manually close. Are we good with that? I'll do another one. We've got the time to do it. Might as well make use of it. It's a tool to your trading skills if you want to use it. Let's do it then, absolutely. Let's do it. Well, I'll do it slightly higher, then I'll do it with you then. What's going to be, could I work it out for? What did you say, was it 90 bucks? Okay, do it. 90 bucks, 2 grand I've risked because I work on the 2% or less principle, that's 90 grand. What's 90 to 200? 1800 is 20, 0.2. Is that correct? 20 times 90 times 9, yeah, 0.2. And I'm going to do the trading stop like you guys. So I'm just going to go into the sell. You got it? I'm now going to find the damn thing with all these horrendous ones down there. But they're not doing well. They're doing a lot better this morning. So I don't stare all the time. It goes up and down, up and down. The nows, the Dow, everything was in profit earlier on. You will see, up and down. Where is it anyway? What was it again? AUD shit. Oh, there it is. Now I'm going to put that in. Left click. Trading stop. Custom. Put in 500. And I pray OK. And look at this little change. Put a T beside it. What's this now? There. It's changed to a T. Can you see that on the screen? Now I've got my trading stop. Now let's leave it alone. How's my Dow doing? Is that doing OK? At least the Dow seems to be trying. That's coming up. So it's probably a bit of a profit, but the Kansas CHF was down about 150 earlier on. So let it run, see what happens. But I don't like to stare all the time. If you want to see anything quickly without faffing around, you go right click, go to trade levels, and it appears there. The stop will be up here somewhere. Should be anyway. Oh, it's trading stop, beg your pardon. Okay, unfortunately, it doesn't show. Don't know why. Go and ask some guy who knows the tech. Don't know. Dow Jones. Am I on this one? Yeah, there's that one. Got me stop up there. If get rid of it, I just go to trade levels. If I want to get it back, right click, go to trade levels. There you are. If I want to, I can even do it here. If you're uncomfortable with it, you can modify your stop down there, or you can delete it or drag it up and down there if you want. Up to you. I want to now on a bit of a roll. I want to explain about cutting the position. Let's say you're doing okay. Let's take oil. Now, as you see, my stop loss I'm buying is better than my entry. So if it just looked like it might stop me out, what a pity, we're 73 or but I've let it. If I get stopped out, be a profit. Okay. Let's say I decide that I want to not close my, but cut it. I'm the AUD CAD, and I might want to close half of it. So I've got 10 minis, I've got 10 micros, 1 mini, 10 micros. I want to close 5. I double click on there. I put in 0.05, for example, in the volume. And I click on there, which I'm not going to do right now. And therefore, I banked half my trade. So that will change to 0.05 and 5 micros being banked. So you don't have to close the entire one. You click on volume and you can close part of your trade. Unless you've got 1 micro, then that is the minimum. You can't actually do that. Just bear that in mind. So you shouldn't have partly close. You can modify by putting in here, or you can drag it up and down, etc. All cool. I haven't had a look at chat blind. Are you all cool with that? Apparently not. I don't think you can. I've fully checked it out because I think whatever comes out, then I can change it around. But according to the tech guys, no more than I do, you have one at t'other. We can try both of them. But Trevor, I'm going to be honest with you, you've got a fair bit more time the average person to be in front of it. So you can maybe just do the normal modification now and again. Do you know what I mean? So you look at it once every 20 minutes, half an hour, whatever, you know, but yeah, if you don't want to do the trading. And I think the trade is quite useful if you're going to sleep at night. Then you can't modify because you'll be snoring. You get the idea. Okay, I've gone to that fairly quickly. I don't mind repeating. Remember, a golfer hits 200, 300,000 balls a year. That's why it's a better golfer. Repetition, muscle memory, repetition, muscle memory. Okay. Any questions on that? Major thing I try to get across people is the learning of the number crunch is one thing, but it's getting the concept. If you're not getting the concept, it's going to be parrot fashion. Then you're not in control. Somebody else is. You need to get the concept of how you're fishing, and then you can instead of just blindly getting someone else to fish for you, as they say. And I'm selling a course on common sense, by the way, and it's about £1 million a course. It's the cheapest and best £1 million. I'm joking, obviously. You can never get, because 99% of humans, including myself, often forget to use basic common sense. But yeah, okay, going back. Anybody not clear on this, want to do it again till they are clear? If you don't have the money, don't have the knowledge, don't have the interest, don't want to do it, there's not much point. But anyone wants to do it, wants to get this boxed off, I'll do it again. What's the difference for why? Okay, yeah. You've heard of MACD. You've all heard of the MACD. I don't really use it much, but some people do. I'm not saying you're wrong, I just don't. It's up to you. MACD is a moving average convergence divergence. You with me? So it sort of it's a lagging indicator. When it's diverging, it means the impetus is quite strong in that direction. When it's converging, the impetus is slowing down. Okay, it's as simple as that. But the problem with that is, unless you use extremely short, almost exponential moving averages, the lagging on the 50 and 200 is so long, I don't take a lot of notice of it. Okay, going back to the EJ, we call it EJ strategy, EJS, or whatever. Are we good with it? We're back to Jose, is he still here? Any questions you mentioned earlier on today? When you WhatsApped me earlier on this morning, have I covered that, or do you want me to just go over a couple of things again? We've got the time now, let's make use of it. Good man, good stuff. IOS, I'm sorry, my friend, you might as well speak Hungarian to me to come to IOS. I haven't a clue. That's Clinton's the guy. He uses Apple. I don't. I know basics of it, but I mean, don't. He'll go the intricacies of it. But not iOS. Sorry, iOS is to my Apple. No. Standard. Sorry, yeah, 10 points, 1 pip. Yeah. A lot of guys say, "Hey, 25 pips, that's so ridiculously expensive." It's actually 25 points, 2.5 pips. That's why I say to guys, let's take this one here, it doesn't really matter. Ignore the point, it won't make much difference to you. The spread is between the pips. So that spread there is about 3 pips or 30 points. It's not standard exactly what it is, it's completely standard. So one bloody thing in the world, Peter, is standard, yeah. But the only reason you have points out there is because MetaTrader 5 has a large amount of brokers overseas, which have big guys with big Tom. In other words, you know, you get John Smith there, who's got a $5 million US, you know, maybe a 80, 90, 100 million rand individual account. The points count because it's such a big amount. But the guys with, no disrespect, tiny amounts of money, which you do tend to have for outside the, you know, the Western nations, unfortunately, it's irrelevant. It's like, it won't make much difference to your life if it goes, the interest rate goes up or down by 1 basis point. But it will if you've got 100 million rand or dollar investment, clearly. So don't worry about the points. It makes no mathematical difference. When you buy a box of matches differential. Once you get a few 100,000, it might make it. It's not such a big deal. But when you're less than 10 grand, it's irrelevant. So what I'm trying to do is not being harsh and like that, trying to put perspective what's going on out there. I mean, there's a large amount of accounts. Individual accounts are bigger than the entire quick trade book of the entire thousands of client base added together. Get an idea of what you're dealing with out there. Actually, Claire's EJS, named after a guy called Etienne Joubert, who suggested the idea in a WhatsApp to me. I looked at it and thought it's not a bad idea. I'll be honest, I went and developed it a bit further. Got some guys who are embarrassing, people like Farney and that, quite bright lads, discussed it a bit and developed into that sort of idea to see how it goes. This is an EJS, just so we're on the same page. I suppose you could use gold. How many works out in gold? You can use the NAS and the Dow, but we haven't got a situation in the NAS and Dow to use it. But there'll be different amounts involved because the spread's wider, the volatility is wider. And if guys are still struggling to get the concept of the EJS principle in the first place, why complicate by doing the indices? So sticking with the currencies. But remember one thing, Claire, not the rand. Not the rand. We're talking the crosses and the majors. What do I mean by that? Some people know it, some people don't. The majors are the euro dollar, the Japanese dollar, the pound dollar, and the Swiss franc dollar. Those are the four majors. The crosses are the Australian, New Zealand, and Canadian dollar. So if I said the majors and the crosses, they have those 8 different currencies. Outside that, they're called, including the Swiss krona or whatever, Danish krona or Mexican peso, the south and around, they're called exotics, different setup there, different costs, different margins, different ball game. So crosses and the majors. I hope we're good with that. See how it's important to ask questions, guys, because guys don't, and they come up and they do things 3 months later, and they've studiously disciplined enough to attend the training room, haven't asked questions, I couldn't read their mind, and then they suddenly be doing something wrong because they didn't realize. So why it's important. A lot of guys have been trading and didn't know they could cut their position. I can cut this position immediately if I want to. I don't really want to close it. I cut it by once. I put 0.1, click close, and I got 0.1 running, and I bank the other. I won't do it now, clearly. It's not looking too pretty at the moment, but anyway, you get the idea. Unmute, certainly. No pressure, Ken. Be quite experienced. It's always good to hear from you. You had a lot of value.
Yes.
Good to have you.
Yes,
Go.
mate. Yes, mate. Yeah. You know, you as I'm your trainee, I know about the DXY, the correlations of the currencies with the DXY and indices and all that, and I can apply that. But now I've seen something today. You mentioned the US 10-year bond yield streaming chart.
Yeah.
Yes, I'm afraid I do not know
Okay.
exactly what it is and how to apply it while trading. Like I can explain what the DXY is, but when it comes to the US 10-year bond yield chart, please,
Yes.
when you have time, please try to
I have time
elaborate.
right now. This is what my time is for. That's why I'm here. Now, that's a valuable question. It's actually doubly valuable because it's come from a fairly experienced trader. So now I'm thinking of a fairly experienced trader who's not sure of it. I'm pretty damn sure a lot of guys on here don't know either. And that's what we want, so I can clarify it. And don't be frightened to ask. You often find, not always, but most of the time you'll find, the answer is actually not that complicated. I'm busy. It might sound when you first start, there's a lot of mystique involved. From that question, I'm trying to get this concept across. But so when you first get into a motor car, it looks complicated, but it isn't. Once you get a bit of practice going. So the fear of complications is the lack of knowledge. It's not. Borrowing money is basically bonds. That's what borrowing money is. You borrow money, you buy a house, you're taking the bond out. It's, you know, you take HP out or whatever, you buy a car. It's the same principle. You put a deposit down, you borrow the rest. That's what derivatives trading. People don't understand they're in derivatives. I'm going on a bit because I want to clarify for everyone this before I come to your point of explanation, Ken. Right, we're not in equity. Equity is you buy a share and you pay the full price for it. And now you've got that and you sit in it until you decide to sell the share. Derivatives you're putting a deposit down and you're borrowing the rest. That's the point of why you have a collateral of the having to have enough free margin. The deposit is the collateral for the lender. You run out of collateral, they will close it. That's called a margin call. So when you go in, you let's say you're going into, I don't know, buy Apple or something. But let's do Apple, for example. Let's make sure we're all getting this, because I'm pretty damn sure they're not. Sorry, guys, most of you have. I'm boring you, but I'm pretty sure most don't. Just put it up, it's all clear. It's $175 a share, US dollars a share, plus minus. You're buying equity, you hand over $175, you have now one share. Simple as that. Derivatives, you put a deposit down, and shares at 5%. So what is the leverage? You divide the deposit, or margin means the same thing, into 100. It's all shares of 5%. So you divide 5 into 100, you come to a figure of 20. So leverage is 20 to 1. That means a $1 movement in Apple, it represents a $20 movement to you, because you only invested 5% of that. Okay. However, 95% was borrowed, and that's what the swap fees are. That's the interest rate you're paying on a daily basis for borrowing the money, like you buy a car, house, or whatever it happens to be. It's not very much, because the amounts are small and the term is small. It's not going to be borrowing $1 million for 25 years. You get my point. Okay, so we're in what we call derivative. The deposit derives the amount of the deposit from the underlying instrument which you're actually buying or selling. That's what it's called, derivative, deriving, derivatives. You got to know that's what leverage is. That's why you've got to be careful. The higher the leverage, you're risking overexposed. I'm going to, very few of them are 500 to 1. So how do you find out what the leverage is? We'll take the NASDAQ. So the 500 to 1, which I'm on at the moment. Let's have a look. Let's do the normal one. You right click, you go to left click on specification, contract size 10, floating spread, it's about 15, 14. On the normal, it's about 2 or 3, so more on the micro, by the way. And yeah, and it says 0.023. Now, that's not 500 to 1. To be 5 to 1, you have to be 0.002 to be exactly 5 to 1. So it might call it that, but you check. So you divide 0.023 into that, and you'll come to a figure probably close to about 40 to 1, something like that. Yeah. Yeah, 40 to 1, something like that. So anyway, that's off the top of my head. So you divide that figure down, it'll give you leverage. So if you want to know what the leverage is, you go in, and it'll be slightly lower leverage on 100 to 500 to 1. So unfortunately, people will not understand that. They think I'm going to change over from my 100 to 1. I go to another account of 500. We've got a small amount of money. Now I can go with 2 or 3, and I can diversify with swap money. All you're going to do is you're going to overexpose, and now you're going to get margin call. I have my stop loss down here. I had my stop loss down here, and I was closed there. Why are you taking the money? Because you did not have enough money to maintain the open trade, the open position. You've got to have free margin. That is the collateral of the lending company. You're not going to lend to the guy in the street who's giving you no collateral. You want collateral. The higher the risk to the person, obviously the higher the collateral you want to defend yourself, because you want your money back plus interest. You know what I mean? So once that collateral disappears, you're out of that. That position will be closed. So that's why you've got to be careful not to overexpose. And increasing your leverage is fine as long as you don't overexpose. And that's why the position size calculator. I hope we're all clear on that. Now, going back to borrowing money, Christoph and that, what a bond is you're borrowing money. That's what governments do. The taxpayer in this country, a good example, South Africa, has a very small middle class compared to Europe, the Far East, Middle East to a certain extent, and certainly America. It's a tiny middle class. The majority of people are either, well, few people are rich, high net worth, and for the majority are basically not rich. I should put it that way. So you cannot, guys on things less than 7 grand a year don't pay tax. 7 grand a month, sorry, yeah, 7 grand a month don't pay tax. So it's all very well said the jobs are going up or whatever, but are those jobs getting income from the government to spend? And that's taxable income. And that taxable income is not enough for all the social services the government has to protect. They've got to bail out Eskom and all the other guys, pay the, the social grants and build road, God knows what else they have to do, pay for police force and all those other hospitals and all those things you like to have for free. It's got to come from somewhere. The government does it. So where are they getting the money from? You can't just tax you, because then you get to a point where if you tax you anymore, you either take your business elsewhere or you leave because it's not worth you working. So there's only so much they can do there. So they've got to go and borrow the money, and they issue bonds. Okay. Now the US 10-year Treasury note is a bond. If it's 15 or 30 years long term, they call it a bond. I think it's 3, 5, and 10. I think it is. They call it a note. And if it's a year or less, they call it a Treasury bill. It's just length of term, same principle. And I think on the US 10-year note, I think it's $1 million or $10 million. I forget what it is. It doesn't matter. It's a piece of paper like $100, 100 Rand note or 200 Rand note. It's got that piece of paper saying that promise to pay the bearer, and it's backed up by the government. We call that sovereign debt. Is the government, and that's supposed to be the most risk-free of the lot. That's why all panic when governments get into problems, because once you're tangled with the risk-free area, then you get serious cataclysmic effects on the world economy. So coming back to that, they will issue those bonds. Now, the piece of paper, although it's got, let's say, $1 million on it, that $1 million will still have the same amount. Not necessarily the writing's not going to change, but the value of it will go up and down inversely proportional to the yields it comes off. Okay, so if the yields come off, the value goes up. If the yields go up, the value of that $1 million goes down. That's just like inflation, if you like. That 200 Rand note you got hold of, let's say 10 years ago, is still a 200 Rand note today, but it's gone down in value. That's why the yields are important, because we look at the yields because the interest rate on that bond will fluctuate. Now, if the interest rate goes up, right, then it becomes more attractive to go and invest your money in an interest-free area, in an interest rate that gives you a nice income with absolutely no brain effort, called no-brainer. No intelligence required, no risk involved, no effort involved, nada. It's like saying I'm put 1 million Rand into a savings account. That's all you got to do. No more effort than that, and you get your monthly going up. Now, if the interests are going up nicely, clearly for making no effort for your return, why would you go and invest in shares? However, the interest rate comes down to, like in Japan, at 0.1%. You're getting solid return on your money earned on the yields or interest rate. You've got to look at alternative forms. And that's why they go to the markets. You get my point? So that's why it's inversely proportional. If the yields go up, it is going to be a negative on gold, and it's going to be a negative on the share price and the indices. When I say share price, clearly means the indices as well, because it's an index of share prices. So take that as read. If, however, the interest rate comes off, people turn to shares, okay, and they'll turn to gold, because gold gives you a capital gain and it gives you no dividends or interest. So they call that the opportunity cost. So you buy gold, you're expecting capital gain, but you're missing it. It's an opportunity cost you're missing out on because you get no dividends. So if the dividends are less and less and virtually zero, there's no opportunity cost to you. It doesn't matter, you're not losing out. You might as well go into gold, it becomes more attractive. That's why you're going to say, let's go and buy gold now. Let's have a look at the yields. Yes, they're coming off. Let's have a look at the dollar. Yes, it's coming off. Therefore, we buy gold. Well, I'm thinking of selling gold, but hang on a minute. Interest rates going up and the gold and the dollar's going up. Sorry, interests are coming off. Sorry, yields are coming off and the dollar's coming off. I'm not sure I want to be selling gold. I might look to maybe buy it. It reverses. When I say inverted proportion, it goes the opposite direction. Like the bond goes up, the yields come down. The yields go up, the bond value goes down. It still says, let's say $10 million, the $1 million note, like your 200 Rand won't change on the note, but the buying value will change as a result of inflation increase. Inflation goes up, the value of the currency goes in the opposite direction. Same principle. Hope you've got that. Okay, no problem, Jose. You've got to go, I get that. Does that make it more clear, Ken and Company?
Yes, mate. Thank you very much.
Okay, it's important stuff to learn. As Valerie asked this, these are things one needs to know. You can't sort of let trade like a fundamental. You've got to be aware of it to understand what the heck's going on around you. I think it's Keone mentioned that he didn't know much about the economy, etc., till he sort of got involved in the course of the trading rule. Fortunately, guys, it affects your life. People say, I'm not interested in politics. We haven't got much choice. You've got to be interested in politics and economy, however boring it is, because it affects your life. And because people, luckily for the powers that be and the big powers out there, luckily for them, most people are ignorant on that area. And the more ignorant are, the more easy are to play. And they come out with all these stuff or talk about very, very puerile matters. You know, Prince Harry didn't make it or got caught his trousers down or had to leave, and they make all this fuss about that to keep you away from serious issues they don't want you to know about. So they want you to remain unknowledgeable on it, and most people unfortunately playing that game, they're not knowledgeable about it. If nothing else, you've got to know because it affects your life. And then because you can question them, you can say, hang on a minute, you BS me, mate, that's what's happening. And then you realize that these guys are playing us. They are, big time. And the information source, don't rely on it. It's a narrative. They're selling you. It's a sales pitch, basically. That's the trouble with democracy. It's become a sales pitch. You can't get elected unless you get a lot of donors who can fork out money for you to travel around the country doing your sales pitch and your sales pitch on TV time. It's a sales pitch. And if you can see through it and understand stuff, you can then make your vote on an area of probability. And half these bad guys get in because they're making all sorts of ridiculous, simplistic comments to very uneducated people, and they're basically falling for it, and that's how they get away with it. And to say that ignorant is probably a little bit harsh, but there's definitely not, if not uninformed, misinformed. And that's the most difficult thing today, is trying to get yourself informed. It takes effort, because I guarantee from social media and the mainstream media, it ain't gonna happen. You're gonna be missing. And that's the trouble. Well, it's not easy to get information now, even though we live in an information technology world. You're fed with BS, I'm afraid. And finally, hey, I agree, hey, most people who've been around a bit will know that. Facts, not being nasty, it's fact. Okay, so that's where we come to the part of it. So you know why, where, and what you're doing. It's part of a proper economic pattern that fulfills an economic use. It's not the poor guy hasn't got much, thinks he want to make a quick buck so he can pay his bills at the end of the month, so watch the line go up and down there. So it's a bit more to it than that. You get the idea. Okay, done quite a bit of speaking this time, but I've used it to try and get people educated in the basics of it. The rest is number crunching. As long as you got the overall concept, then you should be good to go and get it. And then you won't be so upset by things because you understand why they're happening. Okay. Are we all good with that? So you now know, recap, the position size calculator, you got it. If you haven't, get it. I've told you how to do that. Want any details, you left click, you right click, you go to specifications, gives you details on it. If you can't read them, then you ask and I'll explain. It's not that difficult. You've got your dollar index. It's made up of 6 currencies. The major one, over 50% is the euro, by the way. For the 6 currencies, just don't have to remember it. I'm saying anyway, is the euro, is the Japan, it's all the majors, Japanese yen, the pound and Swiss franc, and the Canadian dollar and the Swedish krona. But the biggest part of weighting in that 6 currencies is the euro. The economic calendar you've all got now gives you 3 and 2 star. 2 star, keep in mind, the 3 star can be important. And some take on, depending on the situation globally, more importance than normal. CPI latest take on more importance than normal. Okay. Number 1 has always been the non-farm payrolls, but now that's falling slightly under CPI until we get certain way forward. And there's a lot of talk about recession already here and there. Will it come there or whatever? And a lot of it's guided over because people don't want, to be fair, international financial panic. Now, because we don't queue up the bank to take our money out, we go to our phone, the computer to extract money. They're terrified of panic. The SVB, what do you call it, Silicon Valley Bank, literally, because it had some problems with the long-term bonds, which I mentioned earlier on, came out quite clearly, told old Joe Public out there, they panicked and within half an hour withdrew 40,000 million US dollars. 40 billion. What's that? It's about 750 billion rand within 30 minutes they're extracted. Hence we've got the problem on the bank. Before they couldn't do it because all have to get in the car and go to the bank and do it, and they shut the doors, you can't and saves it. But now everyone's got that. So they're very frightened of getting people human panic out there through mass media, which they tend to do. So unfortunately, sometimes it's correct to keep them slightly less informed because emotion takes over the man in the street. They don't understand and they panic. You can't have mass panic. So create a problem that wasn't there, but now becomes a problem. You see what I mean? Just outside the top currencies, 8 of them. Good question. I suppose the Chinese yuan. It'll be followed more in the future. We're not following as much as we do, actually. But I think that probably will change in the next 10 years or so. But probably the major one outside the major crosses of 8 currencies will be the Chinese yuan. YUAN. Okay, Anne-Marie, catch you at 4. It's nearly 11 o'clock anyway. But I hope you've learned something in this particular session because we don't have trades. We'll let them bob around, and I've decided we'll try and make use of these times that you can get some value on the overall picture. Because I'm telling you, it's a fact. Questions being asked in live chat and coming back to me is people are trading the international trillion-dollar derivatives market without knowing their arse and their elbow. And it is concerning because there's usually people who can least afford to screw up and to try and get them to at least get an understanding. And whether they trade or not, it's important to get an understanding because it does affect their lives. It's vital. And hopefully create a few more people who are less played by the damn media. Any comments on all that, Farley? Have I gone on too much? Does it add any value or have I bored everyone to saying the obvious or anything like that? Because I'm trying to add value to get understanding.
No, thank you very much, Roger. I really learned a lot. It's always sometimes that you're looking it in a different way or in a specific way, and then as soon as I get your opinion and other people's opinion, it broadened my insights towards this specific topic. I love it. Thanks.
Fantastic, thanks. Because that's what I want everyone to do. It's not say, oh, I'm right, you're wrong, and then get into a bloody argument. No, it's supposed to say, I didn't know that, Ken. I didn't know that, Fun. I didn't know that, Marie. I didn't know that, Jose, or whatever. I learned something there. Eat humble pie. Suck back your sodding ego and learn. And that's what we come up with. And I try to deliver the facts as I see them. But, okay, sometimes I might be wrong. Sometimes I missed that. Or sometimes I was misinformed. All I can say, I'm not doing it on purpose. You know what I mean? The media do it on purpose because they're trying to manipulate your mind to think the way you do it. It's very good. I don't know if you've heard him, Douglas Murray. He's a pundit, lives in the States, UK in the States. He's often on there, and he's written a few books. And on that subject, is a bestseller. He's made him very famous. Talking about what I've been talking about, how our thinking is being controlled in today's technology by everyone having access to a cell phone, and the controlling that information. The tech billionaires are controlling our minds, our thinkings, our beliefs, etc. We're all talking about stuff now. I'm not talking about other stuff. Why? Because they put it forward to be talked about. And most of it's fairly puerile. And the biggest one is this gender dysphoria, you know, the etc. At less than 0.001% of the planet having problems which, whether in a female or male body, you think it'd be 90% the way they're flogging it. Because it's a way of saying, yeah, it's important, that tiny percentage involved in it, but most, it's not really of much value. What is of value, they're not talking about, because they'd rather keep you, to say, like the mushroom, keep you in the dark, basically, yeah. And that's how we're manipulated. That's how bad guys get in, because we're manipulated. And Biden should never have been there in the first place, clearly. It's not with the Democrat Republic. He shouldn't be the president of the first world. The most powerful nation on the planet. He's not up to it. But he's put in there because the mass media made you put him there. You know what I mean? And I'm not talking about individual politics. That's your choice. I'm saying this is where the problem comes in. That's why we get in this country as well as overseas. We get guys who are not up to it and forced because we've got a bigger budget and more access to the information source. And we all have it instantly on our phones and laptops. And that's where we manipulate. We've got to look through it and think of it and not just jump on our animal emotional instinct of fear and greed. Think it out of it. Thanks, Pietro. Thanks, Conrad. I hope you'd benefit a little bit. And it's ongoing. This is not a class, do a few, take an exam, pass, and off you go into the sunset. No, it's an ongoing. It's fine. He's a bright lad. I'm embarrassing, but he is. Okay, just suck it up, Farley. You're a clever guy. Tough. And he's been doing it for a while, and he's learning. Now, if he's got to learn, Ken, he's doing it for a while. Oh, yeah, and Ken as well. He's doing it for a while, and he's learning. So it's not something you're going to learn quickly. You can pick it up. I learned. I didn't know you could do that. Oh, right. I've been doing it a few years. So it's an ongoing process. And guys turn around, they say to me, I want to make a lot of money, but I'm too busy. I haven't got time to go for the trading and learning process. I just shake my head. I want to be a surgeon. I haven't got time to study for it. I mean, hey, you know what I mean? If you haven't got the time to do it, well, then don't do it, because you won't be able to do it. Yeah. You've got to put in to get it out. Okay. Good stuff. Okay, we're just going towards the close now. We'll have just a recap, anything happening there. We've got the NAS up at the moment, it's coming off a little bit, it's just jumping around a bit. Gold seems to be in that narrow range of 20 to 25 mentioned. Not much to add on that one. CAD CHF, I'm just sticking with it. Anything happening there? CAD CHF.
Where's the gold at the moment? Because I see the dollar is gaining a bit of strength there before the CPI.
Gold the dollar's just drifting around, popping up and down. I doubt it's going to get back to 102 or below 101. Probably that 101 or 102 range dropping around. Yeah. But anyway, gold is 2020 and 2025. Been there all bloody day.
Yeah, it's been below 101.1 for a while. So I don't know how high the US dollar is going to go. Maybe tomorrow if it strengthens.
No, about it. Not maybe that. Until tomorrow, you won't know. Until tomorrow, we don't know. It'll drift. Okay. Look at gold. It's drifting from a $4 range. It's drifting. Simple as that. CAD CHF is a bit of a disappointment, but we're still in it. Now it's starting to pop up. We've got to sell it, unfortunately. You got your position size right because you learned the trading room. If you get it stopped out, well, you're there to fight another day. If you're not taking your profits too quickly, come around you start, that's another problem. People getting the wrong volumes, overexposed or underexposing, not disciplined in the same exposure. If you're risking 200 on one, don't risk 250 another and 150 another one. Stick with that and try not to take your profits too quickly, rather modify your stop. You can hit your TP 3 times and you've been stopped out 5 times, you still make money. You make more than the win the losses. People holding on to losses and then grabbing their profits too quickly mean they've got to win far more than they lose, which ain't going to happen. It's, you know what I mean? Nobody's going to win 9 out of 10 on a consistent basis. I've never seen that. So just bear that in mind. You get good runs and bad runs, but over a period of time, we aim for 2 out of 3 winners. So it's not pretty at the moment, but on the 1 hour, that highs seem to be holding. Just hope this holds and it comes off. We still, though, got in at 43. It's still, you know, it's 26 pips. Never mind what, whether you're down 5 or 1,000 or 200, not the point. You're basically 26 pips from negative. The stop loss is where 67.20, so we've still got a way to go. So keep your fingers crossed. And the stop loss, I think, is above the 200. Just check. It should be, yeah. The stop loss is above there anyway, so that should hold, and it should hold there. It's backed up there, not just on the 50, but over there. So just let it run and hope it comes right. Okay. Okay. And yeah, I think that's a lot. Oh, the EuroCal looks like a bit of a disaster, but is it still in there or is it coming right? Let's see the stuff we got at the moment. Yeah, it's a bit of a disaster, that one. I think we can get stopped out of that one. 70, have it been stopped out yet? Pretty close to it. Yeah, it's been to 75, 76. Yeah, it might. But it's not looking pretty, a bit of technical damage. But then again, that's it. Okay. Right, guys. See you tomorrow at 2 if you can make it. See you today at 4 if you can make it. And see you all 3 tomorrow if you can make it. 9:30 to 11, 2 till 3, and 4 till 5:30 tomorrow. Okay. See ya. Cool. Cheers, finally. Thank you for everybody as well for joining in. I hope you got benefit. Cheers.
Thanks for the wealth of wisdom, sir.
Thank you. It's supposed to help. It's not meant to be harsh, It's supposed to help. If it comes to harsh, it's not meant to be. As long as people understand. It's people drifting around with no money, no understanding, no effort, wanting to get higher returns. I'm trying to put into reality because I don't want to end up disappointed. You know what I mean?
Okay. I'll try eating the elephant one bite at a time.
Ah, ha, ha, I like it. That sounds like an ancient quote. You just make that up. Sounds like an excellent quote, that. Try and eat the elephant. It is a bloody elephant. One bite at a time, guys. I like it. Yeah.